Okay, so the new mayor and the previous administration had cut taxes. And they ended up having to get an emergency $1 million loan. And they canceled the 4th of July festival. Okay, property taxes. One of the weird things about property taxes is they will often do it based on an assessed property values of $100 or sometimes $1,000, which is kind of a strange way of doing it, but you can just put that into decimals by dividing it. So, for instance, and they decreased it down to so this is what they're taxing at based on the assessed property value. So now one thing I should probably tell you is that property taxes are a big part of governmental accounting. A huge part of the funding of government comes from property taxes. Man, is this annoying? This thing is wrong with you. How come you're not focusing? So, you know, and property taxes are, those are what, you know, they assess to run the government, but also they're highly prized because unlike some of the other things like grants, they can be used for anything. So if you need to use the property tax funds for the library, you can. You want to use it for schools, you can. The police department needs something, you can use property taxes. Whereas a lot of times grants are very specific and that, you know, you can only use this for the library. You say, well, the library doesn't need it. What we need is for the police station to have whatever. Well, no. This can only be used for life. So you run into a lot of restrictions that you don't have for property taxes. So property taxes are actually very desirable for governments. Okay, so this is what it used to be. They came in and slashed it down to this, but now most people think that they're going to be going up to some amount, whatever it is. Kind of recognize that. Okay, so these are the following decisions, and these are the only decisions. In real life, you could have hundreds of decisions to make, but we're gonna kind of focus it in on these items here to kind of narrow the discussion. Okay, so here's a few things we got to talk about. Repay the loan. We have that $1 million loan. It's got an interest rate of 7%. This loan can be repaid at any time. The loan could be converted into a 5-year loan with an interest rate of 6%. Yep, spacing here or something. The annual payments would be $200 per year plus the interest. Rebuilding the cushion. Okay, now most towns, most cities and so forth, they like to have about a half year's budget as a good cushion to have because things happen. you have financial crisis, you have a big storm hit, you have some, flooding or whatever it is. A lot of times, or COVID, a lot of times you'll have these unforeseen things that happen, and it's good to have a little bit of a cushion there because you might be short of money for a certain period of time. So it's good to have like a half year's worth of cushion. Now, since that's completely gone, we're gonna have to maybe space out like how much do we recover from that. Replace 2 police cars. The police station has requested a replacement for 2 of its older cars. One of the old cars was in an accident in a forest preserve. Because it was off-road, the insurance company said you can't go off-roading, damage the car, but they damage the car is $36,000. And then there's a lemon car. And the police chief wants to get rid of this lemon before there are any other repairs are necessary. Replacement transmission would be $4,000. The 4th of July festival. We'll need immediate funding if it will be reinstated this year. And new windows for City Hall. Okay, now here are the budgets for the different departments. And actually there is a somewhere. There is a Excel file that has these in there as well. So these are the departments so far. The different departments have given their budgets. And one thing is about governmental accounting that is a little bit can be a little bit strange is that a lot of times, especially for things like there's a type of accounting called government wide, they start out with the expenses and then go into the revenues. Just the opposite of what we think about. We think the income statement, you have your revenues and you subtract out your expenses and that gives you your net income. Government agent, government things like cities and the state and all that kind of stuff, they're generally, they're not for profit. They don't make income. Their whole thing is you look at the expenses and then say, okay, how are we going to cover this? We have all these expenses that we have to cover for the police department. How are we going to cover it? We have these expenses for running the schools. How are we going to cover it? So they'll start out with, there's a financial statement we'll run into later called the government-wide one that is, it starts out with the expenses. And a lot of times that's why you'll see this stuff presented is expenses first, and then how are we going to cover these expenses? It's not an income focused type of entity. Okay, so here is the administrative department. They have these costs. They're going to get revenues of $550,000 through parking TSD estimate, and the deficit they plan on having is $342,000. And by the way, deficits are not they're expected for any individual department. Remember, these are not for profit. A government, by definition, is those things that people don't want to pay for individually. Governments generally don't make cars. There's someone that will do that. So, those things that are, it's not for profit, those things that are not, that the private sector can't cover or won't, those are things that are government wide. So having deficits for any individual department isn't that unusual, and they're usually covered by property taxes. Okay, building department. Other general fund costs and revenues. City Hall costs 4th of July celebration. 4th of July revenues. New windows. Miscellaneous. Okay. Now let's go to the second one. Excuse me. Public safety. Oh, here's our two new police cars. Now, there's something down here, though, that's kind of interesting. And that is that there are grants for the police cars, 15,000 each. So the police cars aren't really going to cost us this. Do the whole thing. So there are grants. Now, these grants can only be used for police cars. And so these police cars really don't cost us 178. They cost us 178 minus these grants. Public Works. Other information, we don't need to do too much with this, but this is something that happens commonly for governments. A special assessment has been levied for a new paved alley for Morgan Street. This levy is for $400,000 to be paid by Morgan Street property owners. Okay, this is one of those things, even though you know, you have property tax and that sort of thing. Sometimes if there's something specific to one area or one neighborhood, there's a special assessment on just that neighborhood. So that's what they're talking about here, is that they're getting their alley paved. Well, that really only benefits the homeowners that are, you know, on that street. So they're the ones that are going to get the assessment. They're the ones that are going to have to pay that. They vote on it, obviously, but the whole, you know, in general, the whole the city as a whole doesn't pay for that, only those certain people. Okay, so let's see. So the budget. Sorry about that. My allergies are just killing me. Okay, so what we're going to do is kind of get our come to grips with this. See, you know, what are we looking at? I had a really good mentor at one of the places I worked at, and he would always say, you know, I used to do auditing, and so he would always say, you know, Mark, you got to get your arms around it first, and then figure out what to do. You know, you don't just jump right in, you know, because I just want to jump right in and do everything. And you're, no, you got to figure out what you're looking at first, and then, you know, get in there. So what we're going to kind of look at is see where we're at. We got all these budgets from the different departments, and so we'll put those in, and then we'll kind of see where we can make adjustments, you know, and see what we can do. You know, we're going to probably raise taxes, but you know, we'll do it by vote. What, you know, what do we want to do with for each of these? All right, so let's take a look. See. Okay, so what I'm going to do is we got all these deficits that we're going to have. Actually, the building department really isn't a deficit. It's a plus. Yay, building department. Okay, so we're going to go through here. So I'm just going to kind of copy these over. So equal administrative department. Okay, so this is in the budget worksheet. More. I don't know why I put all these spaces in here. All right, building department. Estimated other costs and revenues. Safety fund. Oops. And public works. Kind of shorten these up a little bit so we can. All right, so this is what we have for the needs so far. So I'm just going to add those up. And this will be kind of our initial. Okay, so we have to go through, well, let's see where we're at right now with the amount of property taxes that we're going to collect, keeping the old so right now we have 150,000, oh, 150 million dollars. Current rate is 0.19. Oops. Okay, so here's the problem. We have total needs of 3,167,450. Right now, this is what we're getting. So that would be a deficit of $317,000. So this is initially, this is our kind of the starting point. This is where we are right today, right when you start taking over. Okay, now, and by the way, this is very common about, when you talk about elections and so forth, they usually have elections at the beginning of the year. The year usually runs for most places from July 1st through around to the next year, June 30th. And so what happens is that time between when they're elected, right, in February or March, they will start working on their budget. And what you have to do is have a legal budget on the books, when you start your term. That's generally the way it's done, is that it's actually a legal requirement. Now, being in Illinois, we've had trouble with that in the past, but this legal requirement that you, can you guys hear me?
I can hear you now. You cut out for like 10 seconds.
Oh, okay. But you guys didn't drift off. They just got this thing flashed on my screen. So anyway, I'll go back over it. Usually, so they'll take office on July 1st, and they'll have to have a budget that will be approved for July 1st for that coming year. And unlike the federal government, state and local governments must have balanced budgets. They generally can't run deficits. They have to have some way of funding whatever it is they have that they're going to do. So that's what, that's one of the reasons why it's so important to have it. And there are people that get elected to office and don't realize that, and they, look at we got the new mayor from wherever, and then they come in and they go, what, oh, yeah,
you just cut out again for like another 10 seconds.
We got to stop doing that.
I don't know if it's just me, but
no, it's definitely on my end, because I get a little flash. I didn't get a flash for the last one. I have no doubt that it's happening. I'm not sure why. Well, hopefully it doesn't happen again. Okay, well, third time. I just like doing anything in threes anyway. So I'm gonna do one thing real quick here. Let's see if it. It says everything's fine. Okay, well, the computer's lying to me now. So take office, you have to have a budget, a legal budget. You can't run a deficit, and that's required by law. It's a legal budget, and that's one of the reasons why there is the accounting for it is actually kind of serious, in that because there is a legal aspect to it. A legal budget is one that is balanced, and that's just the way it is. So, as you go through here, looking at this, this deficit, this is generally something you can't have at a local level. Federal government, they run deficits all the time, but local levels, generally it's a no-no, and it's not a legal budget if it's like that. Okay, so what we're going to do is, going back here, we have this loan, and this loan we're paying 7% on. And the question is how fast we want to pay it off. Now we can pay it off at any interval that we want. This one, it can be paid at any time. So you can pay it off all in the same year, which you probably don't want to do. Or you can pay it off 100,000 or whatever, how much every a year you want to do. Or we could convert it into a 5-year loan, which would mean that we'd have to come up with this $200,000 per year, and the interest rate would drop a little bit down to 6% for us to do that. So repaying the loan is the first one, and maybe we'll talk about that now. So repaying the loan, let's go to the budget worksheet. So we have this $1 million. And the question is, how much do we want to pay off, or do we want to convert it into a 5-year loan at 200,000 apiece? Now, notice that if we include this in the budget, this is going to make the deficit grow by $1 million, which may be prohibitive. But we need to pay off the loan at some point, and if for no other reason, that we don't want to be paying 7% for interest on this loan. How much is 7% of that? Oops. $70,000. Yeah, so we're gonna have interest of 70,000 if we don't pay off any of it, which is really just money that's going for nothing. It's being paid out for nothing, basically. This money's been spent. So the question is, how much of this should we start paying off? And it's not so easy to know, because you say, okay, well, what if it's, if you pay it off too quickly, right, it might cause problems in the budget for other things. And if you don't pay it off, you're going to have these interest rates, and do you want to convert it or not? So I'll tell you what, why don't we do this? We'll have a vote on it. We'll have a vote. We'll put the 3 different categories here. So for the paying the loan, we'll say, how about this? We can pay off 100,000. Oops.
We can see your screen.
We can pay off let's say 150,000 a year.
Or we can see your screen.
You are right. I am being silly here. Sorry about that. So here's gonna be the options. So this is we pay the loan, so 70,000 here. So 100,000. So this will be option A, we'll say. The option B. And C, we'll say is $200,000 to convert it. Okay, so why don't we just go to the chat and put in your, what do you want to pay off on it? A or B, so this would be at the 7%. And then C is 200. I tell you what, in the chat, if you want to put a different dollar amount in, you can put that in too. So if you want to put in 50,000 or 300,000 or something like that, we can accommodate that too and have another vote on it. So just put in the chat A, B, C, or D. It would be whatever number you come up with. There's no right or wrong answer to this, by the way. So, all right. Anyone else? It's like a real election. Oh, okay. Okay, it looks like C is going to win. So we're going to convert this into a, I shouldn't say wins. It's a process. There's no winning or losing, but it's so we'll convert this into the the 200,000. So this is one we'll use. Now, this is going to increase our deficit by $200,000. Oops. Now it's, again, it's one of those things that's necessary, but now we're up to 200,000 more. Rebuilding the cushion. Now, obviously, if we're around $3 million, 50% of that is like what, around, let's say 1.5 million. We're not going to be able to do it. They had a cushion before at 2.2 million, but that's not something you can just come out with in 1 year. Pull 1.5 million out of it. That's quite a bit. So the question is, how much we build into it for rebuilding that cushion, that we have a little bit of extra money, just in case things that inevitably happen. And you want to do this because going into the future, right? It's good to have a little bit extra just in case whatever happens. So the question is, how much do we want to, set aside each year? And any thoughts on how much we should do for that? So the cushion, 50% of it, again, this is the needs are around 3 million. So let's say they'd be building a cushion of 1.5 million. So the question is, how much should we, set aside each year? I'll tell you what, instead of me making up stuff, how about you guys putting it in the chat? So for instance, if you wanted to put $1,000 aside for every year, the next 15 years, it would eventually get up to about, half of what the budget is. So go ahead and let you guys do it in the chat and see what you come up with. So rebuilding the cushion. How much do we want to set aside? And again, there's no right or wrong answers to any of these. If you want to talk about it, we can too. That's why we're here. Anyone? Do you want me to do?
I have a question, just because I don't know if I fully understand. So they're saving money for how long to rebuild the cushion?
Well, for instance, if you want to rebuild this cushion over 15 years, right, you'd have to set aside, say, 100,000 a year.
Right.
Right. Or if you want to do it quicker, you could set aside 200,000 a year. It'd take 7.5 years or whatever. So the question is, how fast do you want to rebuild it? Putting this whole thing in the budget for this year is probably not very obtainable.
Right.
But you should probably start doing this at some point. Not only are you paying off this loan that they had to take out from before, but getting money back in here so that we, so when COVID hits the second time, hopefully not, but you'll be ready for it. I'll tell you, do you want me to just put, I'll put different amounts of vote on it again. Okay. So let's say that at the 100,000. It's not doing that. Format this thing right. Okay, so this would be, say, 15 years. 150,000. That was be 10 years. 10 years, as I like to call them. And I don't know. I'll say 200,000, and that would be 7.5 years. So let's go ahead and vote on this one too. So, if you want A, say we build it over 15 years, B, we build it over 10 years, or C, 7.5 years, to try to get something or something close to this. This isn't an exact number. It's, so let me go ahead and vote on that. See, okay. And again, there is no right or wrong number to it. See? Oh, yeah, looks like everybody's going with C here. Most people, anyways. Anyone else? Okay. Well, we'll go C then. All right. Okay, so far, so now we're in the deficit of this. So we got to go through some of these other ones here then. Okay, replacing the 2 police cars. So one of the police cars was in an accident, it cost 36,000 to repair. The second one, it needs a transmission. The police chief says it's a lemon. And that would, the replacement would cost 4,000. Okay, so let's go to that budget. Okay, so here are the police cars. So for both police cars together, it would be that. But they would get a capital grant of that. So the net cost of getting the 2 police cars would be 148,000. Now this is included in this 1,075,000. So, we compare to that, but you also have to take into consideration something else. That if we don't get these police cars, what are we going to have to do? If we don't get if we say, okay, no, we're not getting new police cars, what would that mean as far as the old ones?
Repair.
Yeah, so we have to repair them. So, you realize too that the repair costs are how you spell repair. I'll say car A and repair B. So repair A was 36,000. Go through it. And B, I think was 4,000. Okay, so here is our decision. Let's say this is A. Two new police cars. B, one new, one repaired. Or C, two repaired. Okay, let's look at B for a second, because this is the one that is going to be a little bit more convoluted. Which one of these two cars, if we were going to repair one of them, which one is probably going to be the one we're going to repair?
The one with the 4,000?
Yeah. So this would probably be the one that we would repair, would be this one. Okay, so it would be a bad idea to go ahead and say, okay, what would be the amount if we had two new ones? It would be 148,000. If the two are repaired, you're looking at 40,000. If there was one repaired and one new, what would it be? Well, it'd be half of this. This is each. You could also just get that from 89,000 minus 15,000. So 74,000, and then probably the 4,000 up here. So that would be okay. So these are the now. This money, though, is going to be added. If we keep this one, this isn't going to change. The total will stay the same. These other ones will have savings in them. Let me move this over so we can see. This is going to be 0. Oh, that's not right. Let's try that again. So this would be the savings that we would have for each of them. Okay, so let's go ahead and vote on these. So A, get two new police cars, get rid of the old ones. B, one new, one repaired. Or C, two repaired. Assume that the old ones cannot be sold for anything. Trying to make it a little simpler. Anyone else? One more person. Or if there's people want to go with a different one. Okay, very good. So we'll go with B. So that'll be a savings of 70,000. So when we come over to this budget here, we'll say one new police car. How could I do that? Okay, so this would be 89. Oh, don't do that. Oh, I know what I did. Oh, let's try this again. I'm just gonna type it in, 89,000, it's not that hard. Okay, so we're gonna get one new one. And we're also gonna have to repair. And I assume we're gonna repair the $4,000 one. And there's one more thing I got to adjust, and that's down here. Okay. So that will change that deficit by, what did I do here? Oh, that's because I copied it over. Okay, so this should save 70,000 out of the budget. Okay, so let's see where we're at here then. Hopefully that changed up here. Yep. So it's not quite as much as it was. Okay, let's go to the 4th of July festival. And here is where your political sense will take over. So the 4th of July festival, the cost is 58,000. They get 14,000 in revenues. So we're talking about 44,000 for the 4th of July festival. So the question is a very simple one. Do we want the 4th of July festival or don't we? Now, remember though, this is one of those things that of what people expect from their government. For voters, this was the last straw. They took away the 4th of July festival. And this is one of the kind of realities of it is, they don't care that they blew $3 million. They, what? No 4th of July festival. So the question is, we want to keep the 4th of July festival or get rid of it. So let's go and do a very, so keep the festival, yeah, because they have the festival. Okay, so here are going to be the alternatives. Okay, so, oh, keep it. Okay, so keep it. We have one for keep it. Yeah, have a festival. Okay, good. All right. Well, we will keep the festival, and that is a very shrewd thing because for $44,000, you'll have the whole town on your side. So we're going to keep it. Now that means that we're not going to change anything in here. So this deficit will still be 140 if we keep that festival. Okay. What else do we have here? This one, new windows for City Hall. This one there actually is a right or wrong answer to. New windows for City Hall. The savings will be, remove these. Will be $1,000 a year. What will be the return on our money if we buy the new windows for City Hall? You got 20,000, it'll save $1,000 a year. Anyone? So see if you can figure it out. But how much will the return be on the money if we shell out 20,000 and we're going to save $1,000 every year? Say annual savings. Oops, that's a nice one.
No information about how long the window can last when it's
Let's assume forever. Yeah, I mean, if you did have a timeline, you'd do a net present value thing or something. So this would be what they call a perpetuity. So you just take 1,000 and divide it by the 20,000. Return to be 5%. And that's it lasted forever, which we'll assume it will. These windows are so good they'll last forever.
then they should change the new windows then.
Well, let's think about this for a moment, though. If we're making 5%, will we be better off? You know, we're paying 7% on this loan. So you could actually make 7% immediately by paying off that loan for the same money. This is one of those ones that is, at least the way it's, where am I at here? I'm on the wrong page. Oh, here we go. No. Here we go. This is one of those ones that, you know, the savings is 5%. you would be better off just to pay off the loan and make 7% on that. It would decrease your cost, the money saved would be 7% rather than the 5%. So this is one that you'd probably want to eliminate. But you can, we'll vote on it to keep and replace them. But one thing you got to remember too, these budgets are made up by people. Some people will be more in tune to the financial aspect, and some people won't. There's all kinds of things. We had I live in Brookfield, and our school board proposed that we buy this land to put up tennis courts for the tennis team that would cost like $1.5 million, and we'd have to ship the people to the rather than using the same space for, say, a parking lot or something like that, which would be insane. It would literally, to save like, I forgot what it was, like $20,000 a year, they wanted to pay out $1.5 million. This is actually in the budget, and it was, the payoff, it would never paid off, basically. So, a lot of times you got to remember that these governments, even though you think, okay, and by the way, I'll tell you later, but they're made by people that may not necessarily be looking at what the true finances of what this thing is. And I'll tell you something else. This is something you'll find if you haven't already, if you're working in jobs. When I graduated and I started working at places, I thought, okay, I'll go in here, and these people, there's people that have been working here for 25 years or whatever. They'll know everything. It's not like that. You'll find people that are doing crazy things, and just because they don't know or whatever. And they're not. It's not that they're evil or anything like that. It's just that oh, if we get these windows in, we'll save on energy. That's the whole thinking of it. And so you run into that sometimes, though. Okay, but we'll vote on it. You may want to get new windows for the place. There's nothing wrong with that if you do vote for it. Even if it isn't necessarily, it might make the place look better for one thing. But new windows. Or old windows, we'll say. They'll still have windows, but one will be for new windows, one will be for old. So we'll vote on this. So new windows, old windows. So go ahead and vote. And again, if it might be that you want to go ahead and get the windows anyways. Even though you can maybe make more money on it, it might be something you want to invest in. For the building, and that's fine too. So let's go ahead and vote. Again, there is no right or wrong to it. So if you want the new windows, you can certainly get them. And if you don't, okay, looks like old windows. Okay, so we'll keep the old windows. So now this will eliminate strike through. Don't they have strike through here? Well, let's get rid of it. So we're not getting new windows. And so then our budget is, this is down to this. Okay, so we'll go ahead and take a break, and we come back, see if you can figure out what we're going to have to raise for property taxes to cover this deficit of $627,450. And we'll say be back at $703, we'll say 7, oh, it just changed, 714.
Yeah, just a quick question.
Yeah.
With the new window that was canceled, did it change anything on the budget workout? This one, the screen that I'm just seeing.
Yeah, so I took it out. So now the budget would be dropped down to 120.
Okay.
Yeah. Yeah, so yeah, these last ones are ones that will reduce the budget. People put them in the budget, so we're taking them back out and saying, look, we can't do it. Okay, did anyone come up with what the what rate we'll need to cover the deficit? Anyone?
I got 2.32 rounded.
Yeah, that's it. Oh, that's what I got anyway. Yeah, and you could put that in here. What am I gonna do? I'm gonna let's get rid of this thing. I'm gonna put it on the side here. Okay, so yeah, a little extra. And one thing you too, what you might even consider, this is pretty close to what they originally had it at. Right? If you go back to here, they had it at 2.3 and people expect it to go back up. I think they will be going back up. So it's possible you may even increase that. This year they're expecting it. They may not be expecting it next year. So if you have a problem from next year, you may want to say, okay, instead of 2.3, go to 2.4 or 2.5 or whatever, or 0.025 or whatever. So it is possible, when they're expecting it to hit them with it, and then in following years, you can say, look, they didn't go up at all. So you also have this kind of a strange game of expectation that you have. So I think that we would certainly have to go to 2.32, 0.0. Yeah, let's type it out.
Just a quick question. How did
Yeah.
you get those numbers down on the second column?
Oh, for here?
Yeah, yeah.
Okay, well, it's based on the total needs up here. And
Yeah.
these have been adjusted for, let me get these into a common kind of. So these would be adjusted into a common kind of thing here. Now, oh wait, this isn't right. Hold on. Wait a minute, what's going on here? So this would look like this. There's other ways of doing this, but yeah. That's what it was right. It was right what I did before. So this is, the total needs are 3,077,000. So the deficit for just those would be actually a surplus of $400,000. But now we're going to convert the loan and we're going to rebuild the cushion. So, another 400,000 gets pulled out of that. This is kind of a clunky way of writing it, I guess. But this deficit here is a plus. It's not a deficit really. This is a surplus.
And how did you get a 0.0232?
Oh, I'll tell you how I did it. I said, okay, look, this is what we're currently collecting, And then this is the deficit. So I said, okay, so this is, that's the total that we need. And then I divided that by 150 million. There are other ways of doing it, but this is the one I did. And so this would come out to be, yeah, it rounded it off a little bit, but you could also just play with the number here. You know, you can just keep playing with this until you come up with it.
Okay.
Yeah. So, and again, you know, when you come up with this number, you go, okay, so this will cover everything that we need to do. But you may want to go more than that. So I would say this would be the lowest you'd want to go. You don't want to, well, it has to be balanced. So this would be the lowest to go. B, let's put some other numbers in here just for fun. 0.024, 0.025. Oh, we don't want that. Let's see. So let's say that these are the choices that we have. So this would be and all these would cover what we're doing. So 2, 3, 2. Hey, we'll put in a D of 026, say, just for. And again, one of the things you got to remember, and this is true in a lot of cases in business too, is, you know, if when you run into a situation where you're gonna, when taxes go up, people just know that's a tax increase. A lot of times they don't pay too much attention to what the rate is. So sometimes it might be better to really bump it up early on, and then later on you can say, well, we haven't raised taxes in 3 years or whatever. I know that sounds very Machiavellian and very underhanded or whatever, but that's kind of the nature of the business. So let's go ahead and vote. So A is we get this, it'll cover what we're doing. It's a balanced budget. B, we'll have a little extra and see, and you can actually plug these in here to see what it would be. So let's say 0.024, what would that come out to be? We'd have 0.24, we'd have $122,000 surplus. 0.025, 372, and you go to 0.026. Now you got to be careful a little bit. If you raise it too high, you'd have 422 surplus. You know, you also got to remember that that you're dealing with, and so you know, if you raise it if you get hit too high, you know, and where that line is, I'm not sure. You know, it's one of those things you probably have to kind of talk with some people. But let's go ahead and vote. So A would be put it up to 0.0232. B, we jump up to 2. I can't think anymore. 0.024, 0.025. You get the idea. Okay, so go ahead and vote. Go ahead and put it in the chat, A, B, C, or D. There's no right or wrong answer. And I tell you what, on this one, because these are all numbers, we can get an average. So if someone wants A and someone wants C, and you know, all that, we can average them out. You know, part of the political process. We got a B, an A, and a C. Okay, well, we'll take those and we can average those out. What did I do here? Did something wrong. Oh, I didn't divide it. Oopsie daisy. Divide by 3. 2.41. So we could say, okay, we're going to raise taxes to 2.41, 0.0241. We'd have $137,000 balance, unassigned balance in the account. And that'll help, and we can, and that's one of those things that we could use in the future that'll just get added to that cushion, and again, in subsequent years, maybe you won't, it'll be easier to say, okay, we didn't raise it anymore. The 2.41, but and it's going to be a process, when you get to these numbers of trying to make everybody, I don't know if you can make everybody happy, but try to go for the least unhappiness, and yet still have, everything get paid for that needs to get paid for. Now, again, if you're doing this on your own, you want, when you turn this in, you can use any number of these, in there. So put in whatever number whichever one you think is right, or if there's something not on here you want to put in, that's fine too. If you do what we did, though, you're going to have to get at least 0.0232 just to have what they call a legal budget. Any question on that? Making budgets like this kind of stuff is hard because you're balancing what you're charging people, the people that voted for you, and you're also dealing with this. You have the people, the police department, public works, all this other stuff. You have all this other stuff going on that, and it isn't. That's even though there might be some conflict, it's not that they're evil people or anything like that. It's just, how do you do it? What do you do to get this balanced budget? And that's why they go round and round and round with these budget meetings, and what they're going to get. So, any questions on that? Okay, I'm going to let's kind of go off on a tangent here a little bit. We keep 2 different sets of books for governmental accounting for we account for this kind of for like states and local municipalities and all that. We have government-wide accounting, and we have fund accounting. And government-wide accounting is very much like normal accounting that we're used to. This is very similar to regular accounting, in that all the accounts are, for the most part, pretty much the same. There's a couple accounts thrown here and there, but the journal entries for this government-wide are very similar to normal accounting, like we've been doing, for however long. So government-wide there's not that big of a stretch for government-wide as far as doing the accounting for it. Government-wide is fairly new. It's been around for maybe it's close to 30 years now, which sounds like really old, but I mean, it's as far as accounting goes, financial accounting has gone back 400 or 500 years, so it's somewhat new. Now, fund accounting. This is for the legal aspects of running the government. you get a legal budget like we just did. And we have to account for that legal budget. The legal budget is sort of like a, well, it's a fund accounting. It's sort of like a checkbook. It's a similar to a checkbook. Similar to a checkbook, it's going to have the budget in it, but it's going to be a checkbook. Now, there are some very stark things about a checkbook. Checkbooks only have one asset. It's cash. Fund accounting basically focuses on that cash. And you know, when you buy something in a checkbook, let's say you buy a chair using your checkbook, okay, you pay, you write the check, you give it to them, so they get the cash. Now that chair is not going to show up in your checkbook. It's just going to be that we paid for a chair. So everything is an expenditure when it comes to fund accounting. Examples. It's basically everything. Nails of expenditures. If you buy a stapler, it's an expenditure. Pay employees, it's an expenditure. Buy a building, expenditure. Buy a police car, is an expenditure. So these are all just expenditures. Everything is an expenditure. There are no long-term assets on the books, which is kind of weird, but that's the way it is. It's a checkbook. It's saying, so from what we're doing here, let's say that we did the 2.41 whatever. It would say, okay, we're going to get a budget of $3,615,000. It'll say, here's a checkbook. It's got $3,615,000 in it. You can't spend more than that. But as you start buying stuff, these are just called expenditures. They're, we don't put the building on the books. There is no building on the books. It's an expenditure. Police car. There's no police car on the books. It's just an expenditure. Over here for government-wide, we will have these things. These will look like this. Buy a stapler, you'll have an asset. Stapler. Pay employees. Say wages expense. Buy a building. Asset. Building. Oops. Buy a police car. Asset. Equipment could be, or police car, either one. You know, everything over here is just an expenditure. These are all the same, they're all expenditures. So that's kind of, you know, again, it's kind of a strange, it's kind of a strange thing, but this is kind of the way we do it. And it all has to go back to this, that you have this legal budget, and these expenditures can't be more than this legal budget, whatever you're buying. It can't be more than that legal budget. So this fund accounting is really to keep track of everything. Government-wide is just like regular accounting. So as we go through this class, we're going to focus more on the general fund, the fund accounting, because it's so much different than the government-wide. We'll pick up the government-wide a little later on, but we're going to first start on it. It's very strange. It has a budget account. It has budget accounts. You know, these accounts are required that you put on the books for a budget. Regular accounting doesn't, you know, it doesn't make you record a budget. I mean, people have budgets in different departments and different companies, but it's not recorded as a journal entry. Whereas in this case, they will be. It says, look, here's the legal budget. You can't go more than that. You can't go more than whatever it was, 3 million something, 3,650,000. You can't go more than that because that's the budget. There's also budget accounts to put your hand on money. You say, okay, you can't spend this because I need this money to buy the police car. So don't think you can spend this money. I'm going to put my hand on it so that, you know, we don't spend the money for the police car 3 or 4 times. We, you know, you gotta kind of mark your territory as far as what you have to, you know, okay, this is going to be for the police car, whatever it is, the 70,000, whatever, 70,000, or whatever it was. We need that for the police car. You put your hand on it. So it's got these budgets that are built in, and again, it has to do with the legal aspect of running a government. So there's 2 sets of books, and I know you say, okay, 2 sets of books, that's got to be illegal. In most cases it is, but when it comes to governmental accounting, you are required to have 2 different sets of books. You record the same transactions in both, many of the same transactions in, oops, that's not what I want, in both books. So when you buy a stapler in one set of books, you're going to require that as an expenditure, and in the government-wide, you'll have that as a stapler. Now, if you buy a building, it's just an expenditure for fund accounting. You'll record it as a building in government-wide. So you'll have 2 sets of books that you'll be entering transactions in. Question on that? Okay, so whatever you have, you know, written down for the budget thing, I'll put a drop for that in the. I'm drawing a blank. I'll put a drop for that in Blackboard as soon as we get off here, and I think I will call that. We'll call it like a little early tonight because I want to get into. We're going to start working on the some of the nuts and bolts of it next class. Any question on that? Anyway, I think you get kind of a feel for, you know, what government accounting, what kind of the issues are, and why we have to be real careful with the books, because there is a legal budget to it, and that's what the fund accounting is all about. Is it's a checkbook, and that checkbook has a budget, and you can't spend more than is in that checkbook. Whatever you're spending it on, it could be a new library, it could be a pencil. You can't spend more than what is in that checkbook. Okay, questions? Okay, so whatever you have, you know, written down for the case that we just did, just turn that in. And again, you know, as far as like what amount you want to charge them, the rate, that's completely up to you. But there's no right or wrong answer to it, other than it has to be balanced. All right. Any questions?
Yeah, I have a question, but it's for the exams for the last chapter.
Yeah,
Yeah, I received your email which says it has no inventory history rate, but we should use the overall rate for the cost of goods sold. That is understandable. But then for the inventory, we always use the rate for the December 31st. So I'm kind of confused. You're saying we should use the 2021 average for the inventory. But then based on the past examples that we did in class, the inventory we use
yeah, the temporal method uses the average historical cost. And now, if you did record it at the current cost, I would say that's fine, because and this is kind of a sticky point, is that international standards record everything at the current cost anyways. So a lot of times the international standards, they will have them at the current cost on the books. And so a lot of times it will be the current cost, even using the temporal method. The actual method that they suggest is the average historical cost for the inventory, which I didn't give you guys, so you can't use that one. But I'll take it if you put it in at the current, at the December 31st. I'll take that too.
Okay, for the inventory. Okay.
Yeah,
okay.
Yeah,
So
I'll take either, but yeah, in general, the temporal method would be for the historical cost.
okay. So what I'm going to do is I'm going to use the December 31st for the inventory, and then use the 2021 average for the cost of goods sold. Okay.
Yeah, that'd be fun.
Okay.
Yeah, and I think I have to mention, guys, if you already turned it in and you have a different rate on there, don't worry, I'm not gonna ding you anything. You don't have the right, I didn't give you the right rate, so it'd be impossible to put the right rate in. There isn't one. So yeah, I'm not gonna mark anyone off on those. And I apologize for that. I went over it, and I thought that it was fine, but obviously it wasn't. I apologize. Any other questions? Okay, well, we'll pick up next week, and we'll kind of see how we do the accounting for it based on the fund accounting, which is kind of like the checkbook. Okay, have a good week, and I'll see you next Wednesday. Good night.
Thank you.
Thank you.